All right, welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Really appreciate you tuning in. If you're just tuning in, if not, you've been here all day. It's been worth it too because there's loads going on. Let's take a look at that corn table just to give an idea about what's happening out there. It's a little bit better here today. 2.25 cents higher in March corn. Last is 6.19, about 4 cents off the highs. We're up 3 cents in May as well at 6.20 So that board, a lot of green on the screen there. Let's see if we can continue with that. Soybeans. Yes, we can. They're higher too as well today. 5.5 cents higher in that March contract. 15.49 is last. But we had almost a 30-cent range today over there with 28 cents. Wow. Yesterday we had a 31-cent range. So lots of going on in that soybean market. 15.49 is last in March. We got May up 5 3/4 at 15.52 So that's a good board as well. Wheat in Chicago. What's happening there? Double-digit gains strong. 14.5 cents higher at 7.66 May, 14.25 cents higher at 7.72.5. They're about a half cent off the highs there, so a good, strong Chicago wheat board. That's going to be moving into the hard red wheat in Kansas City. What does that look like? 18.25 cents higher in that March contract. That's some good double-digit gains there. 7.87 is last. May's 7.90 last, which is up 17.75 cents. All right, so that's another one. How about the spring wheat in Minneapolis? What's that look like? Here we go again, double digits. 11.75 cents higher in March. Minneapolis wheat 9.12.5. May up 11 cents at 9.09.5. Let's do a quick drive-by in that cotton market, see what's going on. 95 points lower at 126.67. So we're giving back a little bit of the gains we've seen as of late. All right, let's bring on our next guest analyst, and that would happen to be Todd Horowitz from Bubba Trading. Todd, thanks for joining the show. What are your thoughts here? A lot of green on the screen for a Friday.
You know, Scott, it has been one of the wildest markets I can remember. I mean, I looked earlier and I did my update and they were lower. And now I look and they're higher. And I think if you sit long enough, they're going to come back to you. It's been that kind of trade all week. I think they look really good. And there's a lot of reasons that I think we're going higher, but they're not all good, as you know, and part of them are the inflation, the costs, and everything else. But I mean, they look really solid, just from a straight, fundamental and a technical basis. So certainly, I could see significantly higher prices coming at some point. And I mean, I'm thinking potentially, in the sevens in corn, and maybe 18 handle in the beans. Look, we've got some real stuff that could really propel a big number, and that would be, some of that wouldn't all be good, but again, it's certainly out there right now.
Yeah, I mean, you're not the first person to say those numbers on this show. I mean, we've had some other people talking about it, and obviously inflation's an issue, and that's going to drive up a lot of things, prices across the board for that matter, and that could be part of it as well. And you know what? We talk a lot, and I'm guilty of it. The problems we might have with Russia and the Ukraine, the problems we might have with China and what they're buying from us, the problems we might have with our own administration and the inflation issue. But we really don't address, Mother Nature, man. We're going to be going into this year pretty darn tight, wouldn't you agree?
Oh, 100%. And that just happens to be another issue to pile on. You take all these things together, and, if you have higher interest rates, which makes borrowing costs higher, and inputs that are so high, we might have a shortage next year, not only because of the weather, but because of not being able to plant as well.
Yeah, so that's going to make it a little sticky, I would say. That's going to be the good word. All right, you stay right there. We're going to go away, pay some bills, and we'll come back, talk livestock after these messages. All right, welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy, and if you want to see how we close these markets going home today, Friday, the end of the week. That's going to be the most important close of the week. Want to stick around for the Cow Guy close. That's going to be at 1 Central, 2 Eastern. We go for a half hour. We'll close these agricultural markets for you, but we're also going to go into a deeper dive about other stuff that might have affected the day today, like the jobs number that we got this morning from the government. All right, let's use the Cow Guy as a cheap segue into looking at these live cattle markets. Why don't we do that for us right now? Because these markets, they're your money, right? February is up 30 cents in that live cattle market, up 141.90 is last. April's just up a tick, right? 2 cents, 146.77 is last. So that's only a dime off the highs, though. How about that? All right, let's see what's happening over in feeders. We got a higher corn board. Is that pressuring feeders? Just a little bit. March is off 40 cents at 166.32. April's off 22 cents at 171.57. And then lastly, let's take a look at this lean hog market. Lean hogs want to go higher today, don't they? Let's go to April, right? Skip over Feb. April's up $1.40 at 99.77. May's up $1.32 at 103.52. So that's some pretty good going across the board here. Todd, let's talk about anything that really sticks out to you in these livestock prices.
I think they look really good. I think the entire agricultural space looks terrific, and there's a lot of good reason for it. And there's going to be, the higher cost of feed is not a good thing. But of course, there's a bigger demand, and there's some lesser supplies. There's some weather issues around the world, which brings everybody back to where we always have. And our biggest problem today is just still the supply chain issues and some of the other things of getting things to market. But we're going to see, I think, higher prices, and the only wrinkle will be inflation that will maybe price some people out of buying, and that's where it could be the only problem I could see.
Well, we've seen this 10-year yield spike to 1.9 right now as we speak, and that's going to make that dollar stronger. So that could be also less competitive as well. Wouldn't you agree?
Yeah, I do agree, but I also remember, I think when you have the best supply and you have the biggest supply, I think that, again, people want to eat, and, you can't take away their food, and that was, we can't let them eat cake, we have to let them eat beef, and I think that's why we're going to continue to see, no matter what happens, and I think the rates are telling us, even though the Fed won't move, the bond market are saying we're going up, whether you want to or not. I think that's a real possibility here.
Well, you know what they say, Todd? If we run out of food, I'm going to be the last guy alive. How about that, huh? All right. All right. That's Todd Horowitz. He's coming to us from Chicago. Really thank you very much for being on the show. Have a great weekend, Todd. Let's bring this one back to Nashville so I can throw it over to Suzanne.